If IPMAN doesn't go on strike, well, that would be something that government needs to look at, because our first story today starts with Independent Petroleum Marketers Association of Nigeria. They've issued a 7-day ultimatum to the federal government over the non-payment of their 100 billion naira bridging claims by the Nigerian Midstream Downstream Petroleum Regulatory Authority. The association, through its depot chairman forum, made this announcement while briefing journalists in Abuja, warning that they may withdraw their services if their demands remain unmet. Helen Osamide Kings was there.
Bridging claims are transportation cost reimbursement paid to petroleum marketers for moving fuel from coastal depots to inland locations without refineries or pipelines. This system is managed by the NNDPRA to ensure uniform fuel prices across the country.
If NNDPRA...
Today, the depot chairman forum accused the NNDPRA of failing to pay these claims, leaving their members financially stranded. The marketers revealed that they are owed over 100 billion naira, a backlog that has crippled operations at 9 major depots in the north, despite repeated promises by the NNDPRA to settle the debt.
The management of NNDPRA have deliberately ignored our request, even after making clear promises to pay us. One of these promises was made by the NMDPRA at the stakeholders meeting convened on the eve of the last strike action declared by NATO.
They warned that if no action is taken from Monday, February 24th, they will withdraw their services, a move that could worsen the nation's fuel supply situation.
If NMDPRA did not pay our money within 7 working days, we are going to withdraw our services in all over the country. And we are going to withdraw our tanks from loading and discharging. And at the same time, we are going to lock all our stations across the whole Nigeria.
IPMAN also criticized the NNDPRA for imposing abnormal levies, including a 5% commission on the sale of petrol stations, calling it unconstitutional and anti-developmental. With fuel distribution at risk, there is need for the federal government, NNDPRA, to wade in to ensure that this group do not carry out their threats and to avoid having Nigerians go through another state of fuel scarcity. Helen Osamide Kings, TVC News, Abuja.
Well, more commendations are coming in for the Monetary Policy Committee of the Central Bank of Nigeria for pausing interest rate hikes. This latest commendation is coming from the president of the Lagos Chamber of Commerce and Industry, Mr. Gabriel Idahosa, when he featured on our Business Nigeria program earlier today. The LCCI boss urged the Apex Bank's committee to reevaluate its decision on holding rates ahead of next MPC meeting scheduled for 19th and 20th May.
Most of the MPR decisions in the next 2 or 3 meetings will be signaling, indicating that we believe that things are moving in a certain direction. So a very small reduction in the rate will be meaningful in terms of that signaling, to say we are seeing improvements in the key economic parameters, and so this is a signal. So we are not going to see a very significant reduction in rates, but an indication that more reductions are coming. We may see just a very, very sort of symbolic or nominal reduction. But we have to look at the way the CBN now is always looking at a medium to long-term strategy in what it's doing. So it's not taking decisions essentially on a quarterly basis or MPR meeting to MPR meeting. The CBN has, since the new governor resumed, has looked at medium and long-term perspectives in most of the policy decisions that has been taken.
Well, dropping prices on shares of companies continue to weaken trade performances across sectors. The index of the market fell by 0.34%, and the end of business put in losses on investors. Northern Nigeria Flour Mills was the biggest loser in price, which showed nearly 10% downgrade. Others that followed were Incel, Sovereign Insurance, UPD Cret, and UPDC. Companies with price gains were Ikeja Hotels, PZ Livestock, Feeds, Cornhall, and Dar Communications. Well, outside our shores, European shares and the euro climbed today as German elections produced a mainstream outcome, while Wall Street futures firmed on hopes results of Nvidia this week will justify the tech sector's sky-high valuations. DAX futures jumped 1.2%, while single currency rose 0.44% and looked set to test its January top at $0.0535. Now, European stock futures added 0.66%, FTSE futures 0.1%, liquidity thinned by the holiday in Tokyo's market. And MSCI's broadest index of Asian Pacific shares outside of Japan dipped 0.5%. Nikkei featured traded 38,310. Chinese blue chips is 0.26%. Hong Kong shares retreated 0.34%, giving up some gains from their recent bull run. S&P 500 features, Nasdaq features, both gained 0.5%. The Nasdaq had fallen 2.5% last week, with losses led by the Magnificent Seven. Now, India and the United Kingdom will restart free trade talks after a year of negotiations, paused ahead of the general elections in both countries. UK's Business and Trade Secretary, Mr. Jonathan Reynolds, is in Delhi, where he will meet India's Minister of Industry and Supply, Mr. Piyush Goyal, to begin a two-day discussion. Ahead of the meeting, the UK's Business Secretary said it is a no-brainer to seek a trade deal with India, which is forecast to become the world's third largest economy in few years. The talks are being held for the first time after the Labour Party came into power in the UK, and Reynolds says securing a deal is top priority for his government. The two countries share trade relationships worth 41 billion euros, which is about 52 billion US dollars. Chinese e-commerce giant Alibaba has unveiled plans to invest at least 380 billion yuan, with approximately $52.4 billion in its cloud computing and artificial intelligence infrastructure over the next 3 years. Alibaba says total investment amount exceeds the company's spending in AI and cloud computing over the past decade. The company kicks off the year as the winner in China's AI race, drawing investors with strategic business deals and a rising stock of 68% as of last close. The move comes as the global competition among the United States, China, and Europe makes huge investment into the sector, with ByteDance, the Chinese owner of TikTok, earmarking 150 billion yuan in capital expenditure. And wrapping up business news, crude oil prices slipped in Asia today, extending losses from last week on the prospect of resumption of exports from distant oil fields, while investors await clarity on talks to resolve Russian war on Ukraine. U.S. West Texas Intermediate crude fell to sell for $70.36 per barrel, with a downward price review of 0.06%. Brent crude futures experienced an uptick 0.05% to sell for $74.47 per barrel. Bonnie Light sells for $78.62 with a decline of 2.84%. And for the OPEC basket, crude dealers offer $78.19 with an upward price margin of 1.40%.